Hello, good morning, friends, dear invited guests this morning. It's a pleasure being here, and it's nice to see such a big group today. And of course, I am given the task of talking about a very exciting, yet very fast evolving topic. So in the next half an hour, I hope to go through several things, right? What's happening in the tech world? What are we thinking of some of the tech trends, and how are we expressing it in our tech portfolio? Now, we're also very aware that you have already sat through maybe an hour, a lot of content, a lot of good content. Maybe we can start a bit of a poll to see how you're feeling about certain things. So a bit more on the casual note, can we bring it up? Can I trouble you to scan the QR code? We'll make this session as interactive as possible, right? So your responses in the next few minutes will guide how we share, what we share with you. Hopefully you make my life a lot easier for the next half an hour. Okay, maybe can we go to the first poll? So at finance, I think we are a bit too serious sometimes. So maybe let's start with something light. How are you feeling today in this very nice, cool weather? It's the coolest I've experienced Bangkok in several years. So how are you feeling today? Very positive, awesome, great, chill, cold, sleepy, fine, energized. I don't see the word worried. I don't see the word bubble. My life is good. I think Kun Bobby's life later also good when we talk about the panel. Happy, amazing. I see a bit of worry, but it's a small one. Hungry, the buffet tables outside. Okay, so I think we have enough. So today we are feeling pretty good. I hope you're also feeling good about tech today, and I hope to further convince you why you should feel even better about tech in the next several years. To the next question, please. Have you increased your holdings in B Innotech this year? Your response will determine whether we lock the doors and let you out or not. Yes, thank you very much. Yes, we have an overwhelming 2-to-1 response at the moment. Okay, so I think we have a nearly 3-to-1 ratio. So thanks so much for your support. Hopefully after this will shoot up to 200. Now to the third question before we jump into the conversation proper. What do you think are the chances of an AI bubble? On the scale of 0 to 10, how likely you think this is? Quite a differentiated crowd, so we see some not too concerned, a few more people a bit more concerned. Hopefully we can address that as we go along. Hopefully we address that, Kun Bobby and I, during the panel. Okay, quite a mixed crowd. So I think on average, we are somewhat concerned, but you're not running for the hills yet. Great, that's a good start, I think. Excuse me, so I'm on day 99 of the 100-day cough, so pardon me if I do cough from time to time. I think first, let me remind everyone that tech is everywhere. I think as I look across the room, some of us are on a handphone, some on the laptop. That is technology, right? Netflix at home, that is technology, and technology is here to stay and part of everyone's life. And let me describe in a few slides. So I think this is what Wilden kind of alluded to. So these are the top 10 companies in the index as it stands. In blue, tech companies. In orange or other colors, other companies. And it's very clear that most of the major companies these days are tech related. And if we rewind this back 20 years, 10 years, etc., on the extreme left, which were the biggest companies 20 years ago? It was tech company, maybe Microsoft, but there were energy companies, there was an industrial companies, General Electric, number 1, or Pfizer, a pharmaceutical company, at number 5. Today, and with the exception of Aramco, every company is tech. And it is because it's so pervasive, it's everywhere in our lives, it's growing so rapidly, it's become the whole landscape has changed. And this is the interesting fact, and the adoption rate and the acceptance of tech has changed dramatically. Netflix took 3.5 years to reach 1 million users. Facebook, 300 days. ChatGPT, 5. Right? So the acceptance of AI, of tech in our lives is increasing, and we see many more reasons for that to happen. And of course, we're all here today as investors thinking about our portfolios, about markets. Tech is a clear winner through the long term. but it evolves, and as a tech investor, one needs to evolve his or her thinking with changing technology. So rewind your memories back a little bit. In the 90s, it was about the PC. In the 2000s, it was about internet, about handsets. 2010s, it was about cloud. 2020s, AI. So tech evolves is you don't sit there and let it run. You do actively manage and think about the things that change and evolve through time. And that is what active management is about, right? To invest, to think about trends, to invest, and to give you through time a profile as you see before you. So what tends to drive tech? Valuations, that's obviously one. But through time, earnings. And this is our expectations of earnings for the tech sector for the next 12 months. And you make this very clear distinction. It is one of the fastest growing sectors based on our analysts at Fidelity, their consensus view. Tech is everywhere. So let me ask you, 4 companies, 4 key products, what is common? I think I kind of give away the answer. Tech is common, right? What does an industrial company like Rolls-Royce, what has Crown Castle, a real estate company, got to do with tech? They are part of the value chain. Rolls-Royce, for example, a key part of its business is combustion engines for the aerospace industry. It embeds a lot of technology in its engines. While your plane is flying, data is sent to the ground. So the airline can prepare maintenance, spare parts, know the health of the engine. The aircraft, the less time it spends on the ground, the better for the airline. So that's a tech solution in an industrial sector. Or top right, real estate, right? Crown Castle, a REIT company in the US, owns towers. When data passes through it, they collect a fee. Rising data use, great for them. And again, they are part of the tech value chain. So I bring this back to one of the messages that Wilden made in his opening. Tech is everywhere. If we think about it, as many investors do, just above the surface, you miss everything else that's under the surface. You miss all the changes that's happening. You miss diversification. So when we invest, we think above and below the surface to give you your returns, your alpha through time. So you might say, Chris, you told us all of this stuff, these are high, these are long term, but what about the short term? Allow me to go through a little bit more on the shorter term macro dynamics within the tech sector. So first, I think about half of our audience felt that it's a bit expensive in tech. Is that true? I would say yes and no. Excuse me. So I take your attention first to the chart in the middle. Yes, some parts of the tech market are expensive, specifically the US. But if you looked at other parts of the market, I think, returns-wise, the rest of the world has actually started to outperform the US this year, despite the US catching all the headlines. And if I brought it down slightly to a micro level, the extreme chart on the right, Max 7, that has all the headlines, but if you looked at the Chinese equivalent, let's call it the China Tech 8 in orange, they have actually taken over the baton in returns this year. So actually, tech market is not about the US, it's only about the US. There has been a bit of rotation, there's been a bit of change of dynamics, and we see reasons for that to continue going forward. So valuations, I think back to the bubble expensive question. Yes, certain parts of the market are expensive. So the chart on the left, we plot valuations of the US, the valuations of, and that's a tech market, valuations of tech market outside of the US, or in teal at the bottom, China. So Chinese tech, broadly speaking, have returned about 30-40% this year. Is it expensive? I would argue, and the rest of the market, if you looked at from a valuation standpoint, no. The US would probably be back close to their cycle highs and at a very significant premium to the rest of the world. China, after the rally we have seen, valuations are nowhere near US. I think you make that one observation. 2, valuations are nowhere near where they were in 2021 or 2022. So my answer to the expensive part is some parts are expensive. US is expensive in our minds, many part of it. Rest of the world, a lot less. But valuations is one part of the story. Second, when you buy stocks, it's about earnings. And on the right, we plot within the tech sector by regions, what are the expected earnings kind of growth over rest of this year and 26. US sits very nicely at a 10+% earnings growth, but not dissimilar or far from where the rest of the world is. So you think about it, valuations, richer in the US, earnings, not overly dissimilar, probably risk reward in our minds, it's outside of the US. Max 7, right? I think you won't let me leave this room without touching a little bit on Max 7. I think I will make the point is one, Max 7, the fates are diverging. One should not look at Max 7 as a basket. It will increasingly be a stock-by-stock decision, right? And one thing we're thinking about is CapEx, right? And a lot of these Max 7 names are linked to CapEx. So first take your attention to the chart on the right. The biggest reference point at this moment is to look back at the kind of the internet bubble, the big run-up in internet stocks in the early 2000s, right? CapEx then also increased significantly and then came down after, despite internet usage, etc., growing from there on till today. So why this change? At the start, CapEx tend to rise in the new cycle, a new technology. When people are unsure what's happening, they over-forecast. Competition is strong. Everyone wants to be number one. They push CapEx, right? And three, markets tend to underestimate scale, efficiency. As technology grows, you get more efficient. Hence, you see that fall in CapEx after the 2000s, despite the internet becoming such a thing it is today. Now, I overlay this with today, on the left, hyperscaler. We're seeing a similar situation. People are over-ordering. People are trying to figure out what demand is. They want to be first. It's competition going on. They forget about the scale we can potentially get. So at some point, we could potentially see CapEx start to slow as we did with the internet cycle. Don't get me wrong, AI is a nice mega trend, we like it, but we just feel in certain parts when it comes to CapEx, expectations are high. We should be careful. And that leads me to this slide, which I think will give you an idea how we think about the Max 7, right? So where, excuse me, we're more positive, we like names like Meta, Alphabet, for example. They are names that have multi-business product lines with more than 1 billion users globally. A lot of data on hand that can harness AI to monetize, etc. So think about Meta, right? I'm sure many of you, even in Thailand, use WhatsApp. And WhatsApp has now started to monetize its huge consumer user base on the commercial channels, and there's a lot more room for commercialization using AI. Alphabet, the same. A lot of data, a lot of good data. Gemini is an awesome AI tool. I encourage you to try it if you haven't already. And markets are starting to recognize that. It is also becoming a credible competitor for NVIDIA. But valuations are not reflecting all of this. We like Alphabet. We also like Amazon for its cloud hyperscale capabilities. On the flip side, we are careful on all the other stocks, and including NVIDIA, including Netflix, something we've taken profit, and if you throw Tesla in the mix, we're also careful. Right? So within Max 7, we are increasingly selective, and we encourage you to also think a bit more selectively going forward. Don't think of Max 7 only as a basket. So in tech, I think beyond AI, there are many other themes. Behind you are some of the themes you are finding within our portfolio. Some of them a little bit less exciting, you may think, but can also deliver alpha. Let me go through some of them for you. I think AI, right, big trend. AI is more than NVIDIA, right? So this behind me is the value chain or the tech stack of AI. From the extreme left, you would see what we call in the market the picks and the shovels. Through the middle, the infrastructure part. So there comes hyperscalers, data storage. Further down on your right, you would see other parts of the value chain, IT solution providers, data infrastructure, and on the extreme left, software. So where makes sense to us at the moment? First, let me correct. Where we are careful on the picks and shovels. Expectations, like I mentioned, are high. But you look down the chain, hyperscalers, data storage, local data storage, increasingly important as more data is created. We're finding good opportunities there. Down the chain, even us at Fidelity, we're trying to embrace AI. It's in fact part of my KPI. Wilden just gave it to me, he's my boss. IT consultant companies will be important to help organizations be ready for an AI world, right? Reorganize yourself, get yourself around the AI world, IT consultant companies, and you read through their earnings, this is increasingly a source of earnings or growth for them. Down the chain, data infrastructure. AI models ultimately need good, clean data to go in for good, clean data be spat out at the end. Data infrastructure is important. Down the value chain, software. Ultimately, AI is a tool. Something needs to harness this tool to monetize it. What could likely monetize it? In our minds, software, right? So you think differently, down what's the most obvious, what the headlines are telling you. You find good value, good opportunities, less crowded opportunities, and that's what we're doing. Another thing that we are very actively searching is small mid-caps. Now, show of hand, does anyone know what Netflix was doing or what was their main business back in 1997? Yes, so Jonathan, my colleague here, renting videos, closed. It was a DVD mail-to-order company. Where it is now, it's probably in 80-90% of the households of everyone in this room today. Small mid-caps can be winners of tomorrow. Put in the homework, you find the winners, that's one. Two, not too much widely spoken in the market is small mid-cap companies can be acquired. A good small mid-cap company with a good IP, good technology can be very valuable to a large cap company. And you see behind this is our track record for the BB Innotech or Tech Fund. We actively search for M&A kind of targets. So this year we have been rather fortunate. We're now in November. We have 5 companies in our portfolio acquired. One of which is Electronic Arts by the Saudi government fund by Silver Lake not too long ago. Right? So this can be a source of alpha. This is a theme we're looking at. Beyond that, boring areas, industrials, right? Who wants them? But actually, a lot of these industrial areas have yet to adopt technology much, a lot more room for penetration. For example, in farming, technology can enable more precise farming, more precise application of pesticides, more precise use of water, less water slippage. Or in the areas of industrial engineering, still very early in adopting tech. And to us, that's an opportunity. So we're finding good software names linked to these areas that, when the real economy starts to embrace, they could potentially benefit. Music. So I come from Singapore. Years ago, I paid literally 20 Singapore dollars, maybe 20 years ago, for a CD, right? These days, you pay very little for your streaming, maybe 13 US dollars, 12 US dollars a month. The music industry has been under-monetizing their patents for a long time. There's a lot more room for that to happen. Digitize, bundle, throw in podcasts, throw in ebooks. So even in the music world, you see streaming is a small part of some of the key music names in the industry, their business models. A lot more room for them to get back, monetize, etc. So this is one theme we're also playing in our portfolio. Besides that, gaming, right? I see many young people in the crowd today. I'm sure either you, your children, your grandchildren would play games, right? So there's definitely a structural trend behind it. And also, with the rise of AI, it could benefit the sector. Think of the new imaginative games you could have, things that the human mind might not be able to think of, and it translates very well into the media creative sectors. A lot more room for multiplayer, a lot more room for bundling, or even to sell their IPs. So Mario, for example, has been quite a success in the movie world, right? For example, or even Fallout. All these are movies TV dramas that spun off from games. So there's a lot more room for gaming sector to monetize this, and that's a theme we're finding in our portfolio. Besides that, the US and outside of the US, we are underweight the US for valuation reasons. Great market, good companies, it's valuations that take us slightly away from the US versus the benchmark. Where the opportunities, I think we focus a lot about mega caps, exciting companies that hawk the headlines in the US, great companies. But if you set your lens a bit wider, you would see opportunities globally. Let me quote you a few, and you might be a bit surprised they are non-American. Adyen, so that's the stock on the bottom left. So if you went, these days we do a lot of digital payments, right? With your credit cards especially. So if you went to a point of sales, little machine at the counter, you would quite often in Thailand, overseas, see Adyen there. They are a point-to-point fintech provider, and they're Dutch, right? Or if you look, I'm sure many of us travel in Thailand, Southeast Asia, and the world. If you went to a booking system you made with Cathay, Emirates, Marriott Group, you thought you're dealing with them. But actually at the back, bringing this all together, managing supply, managing the network together, is a Spanish company called Amadeus. Key clients, for example, Cathay, Emirates, Marriott Group, and the likes. Closer to home, TSMC, Samsung, no introduction needed, I think. LY Corp, right? JV with a bit of SoftBank, owns names like Naver, LinePay, Yahoo Japan. So my point here is, if you set your lens a bit wider, beyond what's in the headlines, look globally, many good entrenched companies are there, and more importantly, you are not paying a high multiple as you would in the US. And that takes me to, I think, the other question that everyone's very keen to know, China. We are positive on China, on Chinese technology companies. We have been positive since late 2023 till today. We're doing a bit of adjustments within our Chinese allocation, but we like the market. So I think on the left, it needed a moment called, DeepSeek, right? The DeepSeek moment, the Chinese DeepSeek moment, to really open everyone's mind again about the innovation that's happening in China. It took China a much shorter period of time to catch up in the Gen AI race at a much lower cost with all the restrictions put on them. It tells to you the innovation, the power that is available in China, right, when it comes to technology. Policies are a lot more supportive as well in China. Very well run companies, many parts in China. And on the right, from a valuation standpoint, in orange is where the PE of the US tech market is. In blue, Chinese tech market. And you observe that Chinese, despite the rally, despite all that's happening, the innovation, it comes at a deep discount to the US. And to us, that's an opportunity. So China is one area that we like increasingly in our portfolio. So just let me summarize this in the next 7 minutes or so. How are we thinking and positioning the BInnoTech portfolio? So first, a bit on returns. So you see on the left, and the risk-reward standpoint, we excel well to our peers and to our benchmark. And I think one interesting nugget of information, we are not only the largest in Thailand, BInnoTech is the largest, the target fund, right? The Global Tech, Fidelity Global Tech is the largest tech fund globally outside of the US. So we make up about 14% of the industry. So we are a well-known leader in this tech investment space. The other thing which makes us stand out a lot, and you will appreciate through time if you look at our performance, our profile is we are very differentiated. So the slide before you plots how we perform to peers in the market, mainly within the Southeast Asia and some of the key markets. I'll just bring to you two things. So one, we do it with lower volatility. So you'll see less of the ups and downs. We give you a more stable ride. That's one. Two, how are we different to these peers? And that is the boxed up area. How much is the overlap? To these key peers, we are 30% or less the same, which means we give you a nice return, a slightly more smooth ride versus our peers with a very differentiated profile, right? So we are very differentiated in the way we think. I hope you get the sense as I've gone through over the last 20 minutes and how we invest within the tech space. How are we allocated? In blue, us. In orange, our index. Our index is 100% IT. We are not constrained or bounded by what they tell us is IT. We are about 60% in IT. So where are we outside of IT? I think the index provider sometimes narrows the definition too much. Excuse me. So some of the payment names like Visa, Adyen, they are classified as financials by the index. But I think you'll agree with me, it's a tech-ish company. Or even something like, let's say, gaming, Ubisoft, NetEase, they are communication service company. So I leaned back earlier to the iceberg slide I shared earlier. If you think beyond what's obvious, beyond the surface, you capture many more opportunities within the tech sector. From a regional standpoint, we are underweight the US, and us again in blue, we are about 60%. Orange, the index, it comes up to about 82%. Where are we more positive on? Essentially everywhere else. So what are we finding elsewhere? I had a slide a bit earlier on this. A few other examples here. Adyen, I mentioned. Ubisoft, French company that does gaming, right? Or, for example, Rakuten, payment, e-commerce company in Japan. So again, back to the point I made earlier, I'll reinforce that. Set your lens wider. Think a bit wider beyond the US. Good companies trading less expensively, broaden your outreach, broaden the themes you participate in as well. And this is, I think, my last slide. How are we positioned from a market cap or market company size perspective? Don't get me wrong, we are still most of our allocations are still in large companies, very large companies, but we tend to have more small mid-cap versus the index. And why? Again, small mid-caps can be winners of tomorrow. Think of the Netflix example. Small mid-caps can be acquired, and that can be a source of alpha as well. Just a bit of a portfolio statistics, and I think I'll end with this slide. I know whilst I was outside and speaking to some of you, the question is, when do we buy, how do we time, right? I think one, it's really impossible to time, and this is a heartfelt statement from me. Tech is everywhere. Tech will be with us and be with our life for many, many years to come. Hard to time. Growth, earnings growth is there. What you need to be mindful of is valuations, right? And that's what we're doing for you in our actively run portfolio. We don't chase expensive companies. We are very mindful of fundamentals and valuations. So the message I say, stay invested. Be selective where you're allocating. Think maybe a bit out of the box. You find good opportunities and you don't chase. You don't overpay. And that is where we believe through time, the alpha, the returns will come from. Thank you for your attention, and I'm happy to address any questions you might have. Thank you.